What I really am happy about is a lot of cash is coming back in through the billions and trillions of dollars, as you know, that was overseas where companies were locked and they couldn't get it back. We have record numbers of companies coming back in. They're coming back, they're pouring back in, and they're going to Michigan and they're going to Ohio and Pennsylvania and so many different states, and people can't believe what's happening.
That was President Trump with our very own Joe Kernan. Now I'm going to bring in my special guest today from the great state of Pennsylvania, Senator Pat Toomey. Senator, thank you for joining me.
Good morning, Rick.
Good morning. You heard the president there. In essence, the repatriation trade and the notion that this administration isn't really trying to build walls around what was deemed inversions, but trying to make a better landscape for companies to come back. There are exceptions like Harley. Your thoughts on what the president just said?
Well, the president's exactly right. I mean, it was our tax code was driving the inversions in the first place. Our tax code created a huge incentive to engage in the inversions, and we eliminated that incentive for the most part with the reforms that we did. And so, exactly as we expected, we no longer have incentives for the tax code to drive that, and we have companies repatriating, bringing back home hundreds of billions of dollars that was trapped overseas. So this is a very, very good story for our economy.
You know, Jay Powell, the new Fed chairman, spoke, and you had several good questions earlier in the week. On wages, the last year-over-year wage number, 2.7, not very threatening, and actually a number we've seen many times over the last several years. But you brought up a key point, maybe you can explain to the audience with regard to that rising participation rate and how that may have kept wages down.
Yeah, Rick, it's just a matter of simple arithmetic, right? If you're calculating just the average wage and that grows by, say, 2.7%, okay, that's not huge, but the composition of the workforce has changed. And when new people are entering the workforce, they tend to enter at the lower end of the wage spectrum. They might be getting their first job, or they may be returning to the workforce after a long absence. And so, all else being equal, those folks bring the average down. If the total average is still going up, it tells you that people who've been continuously employed must be getting an even bigger raise. That's the only point I wanted to make. If you drill down into the subsets and you look at people who've been continuously employed, their wages are going up more rapidly than that.
And that will present a dilemma for the Fed at some point, along with skills gaps. On productivity, you brought up a key point. One of the issues regarding the tamped down productivity we've experienced of late in Europe. There was just an article in the Journal today. Germany's having a problem in this regard as well, like many developed economies. But it may be a CapEx issue related to the uncertainties of trade policy. You know, tax cuts gave us a tailwind. Maybe the uncertainty is giving us a headwind. Can you handicap those dynamics?
Yeah, so, you know, I don't think there's a great mystery about why the economy underperformed so much during the Obama years. We saw a collapse in the growth of capital expenditure. I think it was because of a wildly excessive regulatory environment, a terrible tax code, a lot of uncertainty that it could get even worse. And so less CapEx means lower productivity growth, means wages are relatively stagnant. We've really changed that dynamic with a wave of deregulation and really pro-growth tax reform. We have seen CapEx spike upward tremendously, but now all of a sudden we've introduced a new risk, I think unwisely, and that is the risk of an escalation in a trade war. And the Fed's most recent minutes, as you saw, they cited reports that there have been some CapEx decisions put on hold and delayed because of uncertainty about the trade. So it'd be a real pity if this really strong economic growth that we have kind of helped to launch gets derailed because of an actual trade war.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.